2-bar pattern, they are more stronger than the 1-bar pattern. You will find these patterns very frequently. They start panicking.
Yeah.
They try to sell off their stocks. And when you see something like this, what can you do? You think to invest. 40,000 will be your potential risk over here. Ready to take that risk? From around 2,800 rupees, currently trading at around 6,000 rupees. So your money would have more than doubled. On the strike, where will you find all these patterns?
Greetings everyone, I am Nimisha and I work at a strike. In the previous video, we discussed about 1-bar patterns and the link is in the description. In this video, we will be covering 2-bar patterns and 3-bar patterns. So let's get started with the video.
Quickly get started and we'll talk about the 2-bar patterns. Now, understand one thing, 2-bar patterns, they are more stronger than the 1-bar pattern. So in the 1-bar pattern, we said that, okay, we need further confirmation and then we need to take a trade. In a 2-bar pattern, we need less confirmation. Did you understand? Yeah. So what are these 2-bar patterns? And these 2-bar patterns, you will find these patterns very frequently. And also remember one thing, once again, all these patterns that we are talking about, they are all trend reversal patterns.
Yeah.
All right. So let's assume you have a downtrend. There is fear in the market, and in that fear, there you find one big red color candle. What will be the condition of all the retail people when you see such a big red candle?
They'll start fearing.
They'll start panicking.
Yeah.
A higher degree of fear. Okay. So there will be people who will be fearing, and in fear, most of the people, what do? They try to sell off their stocks. Now what happens the next day? Let's assume this is a daily chart. Now the same thing can appear on a weekly chart, on an intraday chart, or even on a yearly chart. All right. Understand the concept first. So there is fear at this point of time. Now the next day, what happens is, what if the stock opens down with a gap? Do you understand gap? This was the close. This was the close of the previous day. Okay. Now today the stock price opened, meaning the first traded price, below this over here. So creating a gap down. So this will add on to the fear.
Correct.
But then what happens is, some big bull comes into the market and drags the prices way up. All right. And closes. Okay. This is a close. Closes above the opening of the previous day. So what happens is, you get a bigger green color candle than the previous red color candle. So this two candles together is called as bullish engulfing pattern.
Bullish engulfing that pattern. The green candle is overtaking the red.
Yes, it is engulfing the previous candle. All right. Now this pattern, if it appears with some large increase in volumes, it is even stronger. Now, when you see such patterns after a prolonged downtrend, when you see something like this, what can you do? You think to invest over here, invest, or you buy the stock over here, expecting that the downtrend has reversed to an uptrend. And again, as I said, there is no certainty. There are certain rules to play this particular pattern. So when you are buying somewhere at this range, all right, if you go wrong, the prices starts going down and closes below the lowest low of any of these two patterns. Okay, there you need to put a stop loss.
What is a stop loss?
Stop loss. Very good question. Stop loss is that if you buy something over here and the price starts going down, you'll start making a loss.
Yeah.
Your loss will keep on increasing. The more and more the prices will go down. So somewhere you need to stop.
Correct.
And sell it out. And if after you're buying somewhere over here, the price starts falling down and goes below the low of these two candles, you need to sell and exit, making a small loss. All right. But the probability, if you find such a textbook defined pattern on any particular chart, it works beautifully. Would you like to see some real examples?
Yeah. I had just one question over here. So stop loss is a term, or is stop loss is something that individual person assigns themselves?
No, stop loss is, in simple language, stop loss.
Stop the loss. So it depends upon the individual, right?
It depends on the individual. If an individual buys 100 shares over here and the price falls down, he needs to sell all the 100 shares over here as per the rules of the bullish engulfing pattern. If he buys 1,000, he has to sell 1,000. Whatever it is, whatever you buy over here with an expectation that it will go up, it does not go up. Yeah, we are not gods, right? Every time it will not go up. Sometimes it may also go down. So if at all it goes down, you need to cut it out. And what is stop loss, how to trail stop loss, we will learn in the topic of risk management. All right. So bullish engulfing pattern, did you understand?
Yeah.
All right. Now, would you like to see some real examples of bullish
Yeah.
engulfing? Now, before we move further, I would like to share with you one particular stock in which the RMI, our proprietary indicator, gave a buy signal way back in the month of November 2024, and the price was just trading at around 460. And right from there on, prices gave a whooping rally and went up by almost more than 100 points. Now this signal was given a new buy, and I could track this particular signal when I created my own watch list of the stocks, and on the daily chart it gave a new buy. So within one click, what can be done is you can have a list of all the stocks on the weekly chart. You can understand which stocks are giving you some bullish signals or which stocks are giving you bearish signals in a just one click. So if you want to be ahead of time, sign up for Strike right now. What do we have over here? We have a downtrend. Now what did you get over here? Can you see?
The green candle is bigger than
Yes.
the
You can see this red candle over here. Let me just zoom into it. You will understand it better. Here you go. So the closing is over here. All right. The next day, the stock opens down, a little bit down. All right. And all of a sudden, with some nice increase in volumes, the prices also starts going up and closes above the previous day's opening. So this two candles over here is called as bullish engulfing.
Okay.
And when such pattern appears, you buy on the third day with the stop loss below this line. So you buy somewhere at around 2,200 rupees with
The
the
other
stop
day.
loss. Yeah, on the third day, on this day. You buy at 2,200 rupees, 2,300 rupees with a stop loss below 1,900 rupees, which is the low of this candle.
Okay.
So you analyze your risk. How much is your risk? 2,300 to 1,900. That is almost 400 points risk. So if you buy 100 shares, 40,000 will be your potential risk over here. So if you are ready to take that risk, you buy 100. If not, buy less quantity. So in detail, as I said, we will talk about it, about the risk management in other chapters. All right. Have a look at this. What's happening? From here on, the prices stopped falling down after this bullish
Yes.
engulfing pattern appears, and the price reaches the top of this and even goes higher. So this is the power of bullish engulfing.
Correct.
Now, like we learned bullish engulfing, the opposite of it. What is the opposite of it? Opposite of it is bearish engulfing. Absolutely right. Okay, so what is a bearish engulfing pattern? Let me draw it over here.
So in the single bar the single bar patterns, we need to look into the other indicators as well as the volumes.
Yes.
But here we should look at them also, but we are quite sure
But
that
less
now,
we are more, the probability is higher.
That
Much
yes,
more.
the market will show a positive
Yes,
reverse.
absolutely. Yeah, so in a bearish engulfing pattern, what do we need? The setup. The setup is we need first an uptrend. After a prolonged uptrend, there is a big green color candle. And when such big green color candle appears, the news flow is all positive. And everybody in the market is becoming greedy. They are feeling left out. And okay, the prices will go up more. So what happens is the next day in this psychological market, the stock opens up with a gap. In this case,
Okay.
in bullish engulfing, what happened? The stock opened down with a gap. In this, the stock opens up with a gap, adding fuel to the fire, meaning more and more people will feel left out and the retail amateurs will start buying. But all of a sudden, a big bear emerges and it drags the prices right down over here, and it closes way below the opening of the previous day. So this time, a red candle engulfs the green candle. Okay, and if this appears with above average increase in volumes, it is a stronger pattern. So if you are invested in this particular stock, what do you need to do over here?
Sell.
You need to exit or sell. So if you find such patterns on a maybe intraday time frame chart, a 60-minute time frame chart, or 15-minute time frame chart, so you can do a short sell. What do you mean by short sell? Many people, they generally buy first and then sell. But in certain stocks, especially intraday, you can sell first and then buy before the day ends. The difference is your profit and loss. All right. And there is another segment called as the derivative segment, where it is called as futures and options. So over there, you can have a short position also for few days.
So in like when we sell first and then later on we purchase, so there is a probability of making a profit.
Yes. So you sell at 100 rupees and you buy that at 90 rupees. The difference 10 rupees is your profit.
Correct.
So we'll talk about that when we are talking about short selling or futures and options. In that we'll cover. But the idea over here is, as an investor, you would like to exit when you see a bearish engulfing pattern.
So after we see a bearish engulfing pattern, we are quite sure that the market will come down.
Yes. So bearish engulfing pattern says that the ongoing uptrend is again near exhaustion. Here there is a bear that has emerged and there is a new willingness of prices to start moving down. All right. Now, if at all, let's suppose you bought a stock like ACC or a blue chip company whose fundamentals are very strong, and you have bought it for ultra long term. Long term meaning maybe 10 years, 20 years down the line. And in such kind of a fundamentally strong company, you see some bearish engulfing pattern. You could choose to sell partially instead of selling all your shares. And then when you sell, let's suppose you bought a company share like this, maybe 100 shares you have bought. Okay, you can at least sell 50 over here. And when the price comes down and at a lower level there is any bullish pattern, you can choose to buy that share over there, making additional money. And that additional profits will maximize your profits. Rather than just sitting and holding on to that stock for long term, you could choose to trade in between. Let's have a look at some live examples
charts,
of live charts. So this DV's lab is a weekly chart over here. Yeah, fantastic. What's the trend?
It is bullish right
It's
now.
clearly up, right? It's clearly up. Yeah, the trend is
Yeah.
clearly up. And then what happens out here?
We can see the red candle is overtaking the
Yes.
green one.
Yeah, so it's not a big gap, but it's around the same levels. But still, this
It is
big red
engulfing,
candle,
yeah.
this red candle is bigger than the previous one, the green one,
Yeah.
and some more volumes than the previous one. So this is your bearish engulfing pattern. And when you get a bearish engulfing pattern, once you exit somewhere at around 5,100 levels, from 5,100 levels, have a look at it. What happens?
The market
After
is
few, it's a weekly chart. So after few weeks, the prices starts going
down.
down. All right. And if at all there are some patterns over here, you can make another $1,000 over here by selling here and buying here. So this 1,000 rupees is your additional profit. So bullish engulfing and bearish engulfing are some patterns which generally appears after a prolonged up or downtrend. So as an investor, you need to wait patiently. Until and unless there is no pattern like this, don't trade. Follow the rules. And if you stick to basics also, no? Simple. Yeah, isn't it? Isn't it simple?
Yeah.
Yeah. Okay. Now, let us cover another type of pattern. So we have looked at bullish and bearish engulfing pattern. All right. Now, sometimes what happens is, we'll talk about bullish first. All right. I'll draw somewhere nearby only. Now, sometimes what happens is, you get this red color pattern. The trend is down. You get a red color bar over here or a candlestick. The next day, the stock opens down with a gap and starts going up, but it fails to go above the opening of the previous candle. All right, but it's a really big candle. It closes, the midpoint. What is the midpoint of this red candle? Somewhere over here. So the second candle over here, it closes above the midpoint of the first candle. All right. So if this happens, okay, if something like this happens, this is also a bullish pattern. And this pattern over here is called as piercing line pattern. It's called as a piercing line pattern. So it is piercing line. The rules are again the same, just like a bullish engulfing pattern. Just that bullish engulfing is more stronger. Why? Because the prices have closed way above the first candle.
The candle is bigger.
And over here on this particular piercing line, the bulls won, but not like a thumping majority. It closed a little bit below the opening of the previous day. But still, you can treat this as a very strong pattern and you can buy into it. All right. Similarly,
So it also indicates that the market will show an uptrend.
yes, the trend has reversed to an uptrend. So similarly over here, when we are talking about the bearish engulfing, all right, the another type of pattern is something like this can appear. There is a green candle out here, all right, the trend is up. Yeah, the trend is up. And after a trend, the price, there is a big green color candle. After that, there is a gap up opening. Price starts coming down, but closes below the 50% range of the first candle, but above, a little bit above the opening of the first candle. So if you see something like this is called as dark cloud cover. Dark cloud cover is a bearish pattern. All right. So can you without seeing, can you just tell me bullish engulfing, bearish engulfing?
Okay,
What
so
are the other two patterns?
in the bullish engulfing, that the green candle overtakes the red one. It engulfs it, and it means that the market will come. It will grow. It will show an uptrend.
It will show an uptrend. The
It
trend
show
will
an
change.
uptrend.
The
Yeah, the
downtrend will
trend
change to an uptrend.
And in the
Yes.
bearish engulfing, the red candle overtakes the green one, and it
Yes.
indicates that the trend will
There's a
go down.
potential downtrend. Correct. Just like bullish engulfing, there is piercing line pattern. Okay, you'll remember the name piercing line
Piercing and dark cloud
and
cover.
dark cloud cover. All right. Would you like to see some real examples?
Yes.
Okay,
on the
we've seen
charts, yeah.
bullish and bearish engulfing. We'll look at piercing and dark cloud cover now. Okay. So Nimisha, what do we have over here? We have a downtrend.
Yes.
Yes, we have a downtrend, clear downtrend. Now what is happening is still down, and have a look at this. Have a look at these two patterns over here. Okay, the stock opened down with a gap over here and closed above the 50% range of the previous candle with above average increase in volumes. So Nimisha, this is called as piercing line pattern. Piercing line pattern says that the ongoing downtrend is about to end and we may see a prices to go sideways or upwards.
Correct.
Right? What happened over here? Yes. Stock. Oh, wow. Yeah. Have a look at this. Have a look at it.
Really
It
high.
went like crazy. It was buying at around 21 rupees, and the stock within few. It's a daily chart. So within few days, the price rose up to 34 rupees. Yeah, it's a significant move up over here. Similarly, what happened? Now look at this. There was a small doji over here. All right. And after that, we got a big red candle. And from that red candle, the prices again fell down significantly. Again, there is a bullish engulfing pattern. The prices went up a little bit and then came down. Now this pattern over here, you can tell you can say that this is a dark cloud cover, right? I'll have a look at it. How did the price react from that level? Just like that, on the weekly chart itself, we also have a dark cloud cover over here, and the price reacted a little bit from that side. Right? It went down. It went down. So these patterns are so frequent. Okay, you can see it on a daily chart or a weekly chart or even sometimes on a monthly chart as well. So right now, can we find there's no much pattern over here, but as and when we go and I find some patterns, I'll definitely show it to you.
Okay.
All right. Now let's quickly go on to. So these were the two candlestick patterns. Now let me cover one more pattern. Now don't get confused at all. I'll try to keep things. So I've drawn this on the same page so that you can learn easily. Now we'll go to the third type of a two bar pattern. All right. Now this pattern, okay, is called as bullish harami pattern. Now, what is bullish harami pattern? Harami is not a slang word. Okay. In Japanese, harami means a pregnant woman. All right. Now, how does a pregnant woman look like? A pregnant woman looks like, like this. So some pattern like this appears on the candlestick chart. So how does it look? So
on the candlestick chart.
on the candlestick chart. So what do we need? We need a downtrend.
Correct.
All right, the trend is down, and at the downtrend, we get a big red color candle. Now, after you get a big red color candle, again, as we learned over here in the bullish engulfing pattern, there is a big red color candle, there is fear. Similarly, over here also there is fear. Now, instead of opening down with a gap, sometimes what happens is the prices opens up with a gap, a little bit up. All right. And then the bulls try to take the prices up, but closes within the range of the first red candle.
So in the
So the
middle.
second candle over here is like a baby to the first candle.
Okay.
And hence this is called as a bullish harami pattern. So just like bullish engulfing pattern and piercing line pattern, they are bullish trend reversal pattern. Even bullish harami works like a trend reversal pattern. So from here we expect that the baby will come out and the prices and it will grow. Similarly, on the opposite side, we have something called as bearish harami pattern. All right, how does it look like? So there is a ongoing uptrend with a big green color candle. After a big green color candle, the bearish engulfing, and in the dark cloud cover, we have a gap up. Instead of that, in bearish harami, we will have a gap down. And the prices closes within the range of the first day. So when something like this happens, it is a bearish pattern. So we expect the prices to go down. Clear? Okay, everything is the same only. How does it look on real charts? Let's have a look. So we'll come to this particular chart. This is decal, Dishman carbonate chart. This is the daily chart of Dishman carbonate, decal. It says NSE code. Now what do we have over here? We have a downtrend, a serious downtrend, right? And what happens after that? The price opens up with a small gap and closes within the range of the first candle out here. So this becomes your bullish harami pattern. All right. And after this pattern, what's happening? The prices starts moving upwards. Right? Over here, once again, have a look. So the trend is down. The trend is down. There is a big red candle followed by a little bit gap, and a big green candle closes within the range of the previous one. And from there again we got a up move. Uptrend. All right. So this is an example of a bullish harami pattern. Let's look at another stock, Maruti, and let me convert this into a weekly chart. Now on a weekly chart, have a look at this. This is a recent example out here. So the trend is continuously up. We have a big green candle followed by a gap down opening. Yeah. And this time it is acting like it should close within the range over here, but this time it went a little bit outside. So probably it's you can call it as a bearish harami pattern, but it's even a stronger pattern. Correct. Right? So it is a bearish pattern. So when you look at this bearish pattern, what do you do in Maruti at around 12,800 levels? You sell. And that 12,800 comes down to 11,000. So there is a chance to make around 1,500 rupees out here. So this was all about the 2 bar patterns. Okay. Any questions over here? No. Fantastic. Now let's look at the 3 bar patterns. All right. Now again, 3 bar patterns is also very easy. Okay, nothing to worry about. Now I'll ask you some questions. You answer me what kind of pattern it is. All right. So is like the 3 bar pattern more powerful than the rest of the two? Yes, absolutely right. Why? Because we are spending 3 days. Correct. All right. So it needs lesser confirmation than the rest of the candles. So now tell me, this is a big red candle. Yeah. All right. Now this is a big green color candle. What pattern is this? The bullish engulfing. Bullish engulfing. Absolutely right. Now what if there is a one small doji placed out here in between the two? It indicated that the market trend will go up. Now look at, just understand what happens is on the first day, the prices starts going down. All right. The next day, the stock opens down with the gap and closes a little bit upper, creating a small doji. This is the second day. Correct. On the third day, the price opens up with a gap, okay, and then closes above the opening of the first day. So these 3 patterns together is called as morning star pattern. Okay, so we look for 3 days. Yeah, so you wait for 3 days. If there is a gap down, do nothing. Okay, there's a big red candle, do nothing. So that is for day 1. This is day 1. You do nothing over here. Then you observe that, okay, hey, the next day, on the second day, there is a gap down and nothing much has happened over here. The price stopped falling on the second day. Correct. Creating a doji, uncertainty. The third day, it opens up with a gap and there is confirmation that some bulls came in over here and took the prices up. All right. Now, what can happen is, so if I want to enter the market, can I just, after looking at this doji, yes, now should I enter? No, you should not enter right now. Okay. You just see that the next day the stock opens up with the gap and something like this pattern also appears. So this is a piercing line pattern. but
Yeah.
between these two candles, there is one doji. So these three candles together are called as morning star.
Okay.
Now, after these 3 days are complete at the end of the day, or if you are looking at weeks, so wait for 3 full weeks. After the third week ends, the next week, on the fourth day or on the fourth week, what you do is you buy. You buy expecting the trend to reverse to an uptrend and keeping a stop loss below the low of this doji. Understood?
Yeah.
Now, just like morning star, what is opposite of morning?
Evening.
Evening, absolutely right. So there is something called as evening star pattern. What happens in the evening star? On the first day, on the first day, the candle is green in color. The trend is up. The trend is up. There is a big green color candle. The next day, the stock opens up with a gap and forms a small candle, doji candle. And on the third day, the prices starts coming down, forming a above average increase in red, color candle, above average candle, right? So these three patterns together are called as evening star. Now, when you get an evening star, indicate an exit from that stock over here. Or if you are a trader, this appears on a intraday time frame chart. You can short sell it. Short sell meaning sell first, then buy later, right? So this is morning star and evening star. Want to have a look at the examples?
Yeah.
Fantastic. Let me go back over here on this particular chart. Now let's look at the examples over here. This is a monthly chart of Divi's Lab. Same thing. What's happening? The trend is down. All right. And when there is a downtrend, what do we have? So the first day, there is a big red color candle over here. The second day, it is a doji, a small candle over here. Now, doji itself, it signifies that the ongoing trend is about to end. Now, a few months ago, there was again a doji, but still the prices went down, right? So, doji is just a confirm, is giving you a alert. Now, after this doji, after a big red candle, there is one doji, and then you get a big green color candle with above average increase in volumes. So, these three patterns become
the three
morning star patterns. Yes, that is a morning star pattern. And once you get a morning star pattern, what do we do? So whatever the price is, 3267, you buy this particular stock with a stop loss below 2740. All right, let's see how did it perform. Yeah, so this trend entirely reversed. The downtrend reversed to an uptrend. Yeah, here again you got something like a morning star, and the prices just shot up from there. And this is where we are currently. Yeah, that's Divi's Lab for you.
That is into 3x approximately.
Absolutely. So from around 2,800 rupees, it's currently trading at around 6,000 rupees. So your money would have more than doubled. By what time? April 2023 and November 2024. In 1.5 years, if you double your money, that's good return on investment, right? Yes or no?
Correct.
Yeah. Now that's one thing. Now if you look at Reliance chart also, Reliance, I'm sure it's favorite of everybody. Yeah. How you could have saved yourself, or how you could have bought into Reliance. So Reliance over here, have a look at this. There is a trend is down. Let me mark. The trend is down. You have a big red color candle followed by a doji. Yeah, this you can call it as an inverted hammer also.
Yes.
So when you have an inverted hammer or a doji and then followed by a big green color candle, this three candles together becomes what? A morning star. And when you get a morning star, morning star itself tells you that, okay, it's a new beginning now. So the downtrend is over, the night is over, and the morning has started. And have a look at this. This morning star was at around 1,000 levels, and within a year, the stock rose up to 1,600 levels. That's around 60% return on investment within a year. Yeah, and we are over here. So even at the top, you see everything. You will see everything. Here you will find a 2-bar pattern, or you can also see an evening star out here with a green candle out here, a doji and a red candle out here. On a strike platform, there is something called as tower bottom and tower top. All right. So what does this tower top means? Tower top means there is a one big green color candle followed by two small candles and followed by a big red color candle. So tower top is similar to an evening star as well. All right. So when you see something like this, the price starts moving down. Right. Let me look at one evening star, one more example. Yeah, Hindalco on a weekly chart. See, this is a tower top example. A big green color candle followed by three dojis. Now understand, these three dojis are also very powerful. They are sometimes called as tri-star dojis. Tri-star dojis. So whenever you find a tri-star doji, three dojis around the same levels, they are lethal. If it is in an uptrend, the trend can seriously, crack down. Okay, if it is a downtrend, there could be a huge spike in price upwards. Now, in this case, there was a big red color candle forming a tower top, or you can also call it as a modified evening star. And from there, the prices started coming down a little bit. And even on a monthly chart, if you look at this, yeah, few months back, this was a classic evening star pattern, followed by two big red color candles out here. So an investor, if he's bought some shares over here, he can book partial profits and try to buy back over here on a bullish pattern. All right.
Yeah.
So I hope this is clear. And on the strike, where will you find all these patterns? I've already shown it to you on the scanner module. You have candlestick scanners. Here you will find bearish reversal scanner. Sometimes these candlestick patterns are also continuation patterns, bullish continuation and bullish reversal pattern. So in a bullish reversal pattern, can we find something over here? Yeah, any morning star or evening star? Here we have morning star pattern, LG equipment. So this is still a tri-star doji. There is no, so we need to wait for a big green color candle. And if there is a big green color candle on this daily chart, then we may see. All right. You can also change from daily. You can change it to weekly. Now, since if it is on a Friday and you are looking at it, you can look at a weekly chart. All right. So on in this astral pipe, we can see piercing line pattern. Yeah, there is a big red and there is a big green color candle. So the trend is down and there is a piercing pattern. So from here, we can expect astral pipes prices to start going up. All right. Similarly, bullish engulfing pattern. Let's look at Apollo tires. Prices are down. There is a red candle. The prices have opened down with a gap and closed above the previous day's opening. There is a bullish pattern. So all these patterns, you quickly, you need not look at all the 5,000 charts. Correct. With the help of a scanner, you will quickly get where what pattern is. And then accordingly, you look at the charts, you confirm that with volumes and other indicators, and then take your trading or investment decisions. Correct. That's how easy it is. Step by step. Now, it will be easy if you learn properly and practice. So, this is about candlestick patterns. I hope you have understood. Yeah. Fantastic. Thank you so much, Zubin, and I have really learned a lot. So I think that was all for the candlestick patterns. We have 3 videos and you will find the links to each video in the comment section. Also, in the upcoming videos, we will be covering about chart patterns. So do not forget to like, follow and subscribe to Strike.